Okay, today I'm going to show you how to look for high probability entries in stocks and in crypto. Let's go back to when in crypto on November the 22nd, when everyone was calling it to go lower than 15k. We had downtrend, this low was taken out, made a new low, and then it made a new high. The moment this high got taken with a candle body close, from that point onwards, it made higher highs. So you need to pay attention to this when the first higher high gets made, because this is absolutely crucial, and we call this a chock. So when the chock happens, it's an indication that the trend might be changing, and this happens not only in crypto but in stocks, and it's extremely powerful. Let's say you wanted to buy long-term stocks, but you want to limit your downside. You could use this strategy in order to get amazing entries to increase the probability of you buying and then the price going up afterwards from your entry, give or take within a week or two. So price makes a chock here, and then a higher high is made, and then from that point onwards, price started trending up, making higher highs continuously. Okay, there was some deviation here and made a chock, but price only come down a little bit, and then the continuation continued. So let's say you brought, upon seeing this chock, you brought here as for a long-term position, long-term swing trade. That entry, just from this chock here, that entry would have been absolutely incredible, fantastic entry, and you could have held that all the way up until 124, until maybe, let's say, you started seeing lower lows being made in the market, like here, which is the chock here, chock. Then look how price started making lower lows from this point onwards. So this is so powerful, guys, if you can master this, you know. So the current price on Bitcoin, because we are obviously we're still in a downtrend, I'm expecting price to go lower, because we're still making lower lows, for example. And this happens everywhere, guys. I'll show you some examples on stocks. I was showing my friend the other day, because he buys stocks, and I was showing, look, if you brought using these principles, you could comfortably get amazing entries and not have to stress. You can get high probability entries using this method. So let me show you. This is Tesla. So as we can see, price is going downwards. And how do we know that? Well, we know that because price is making lower lows constantly. Lower low, lower low, lower low. That's the previous lower high. So we had an internal high get breached here. You could have taken a long in this mark with your stop underneath here, and that would have been extremely profitable, as you can see here. But let's say you was skeptical, okay? Let's say you were skeptical and you held price and you waited for this, which is the first shock that breaks the previous lower high. then you could have then got into the market around here, maybe with your invalidation underneath these lows, and then you would have rid this trend upwards. But the best entry would have been off of this internal higher high, this internal chop being made here. When the high gets taken out, there's a retracement, comes back down, and then it starts making higher highs from that point onwards. I call that an internal structure, because this was the previous higher high, that's the low. But this is still a valid trade. Let me show you another example. Let me get Netflix. Okay, so let's say you was in Netflix and price is going upwards. Price is making higher highs, higher highs, higher highs, higher highs, higher highs continuously. And then that's the previous lower high. The moment price chucks and takes out that previous lower high, previous high low, look what happens to the trend. Price comes up, fills in some imbalances here, and here, and then price starts breaking down. And then this is the BOS, break of structure, for whoever's watching that doesn't know. This is your BOS. So let's say you was unsure, you saw this chalk and you was unsure whether to maybe get out your position or open up some sells here. Then you could have waited for the BOS to happen here. You could have waited for this here to then get out of the market or open up some sell positions. And then price just makes lower low, lower high, lower high, lower low from that point onwards. So the market always gives you opportunities to get out of your positions from observing the chalk and the BOS. So guys, it's extremely powerful. Also, if you're not following me and you want to learn more about trading, please give me a like and subscribe. I would extremely appreciate it. So let me give you some other examples. Here's Apple. So let's say you're looking to buy Apple, for example, and price is trending downwards. You got a full signal here from the chalk, and then another BOS, and then price continue downwards. But this isn't 100% guaranteed probability. There's, you still can take losses, but you really can increase your probability by a huge margin just by observing market structure. So price is continues to trend downwards. So then the market makes a lower high here, makes a new lower low, and the moment price chocks here, look how then price starts making higher highs from that point onwards. So let's say you saw this chalk, you waited because you didn't know if it was going to go further and then start making higher highs, so you observed. But the best entry would have been on this BOS here, and then you saw the retracement. You would have got in here with your stop underneath these lows and then riding up this upside. And you're, let's say that's a 4% loss. If you would have taken out any of its futures, obviously it would have been different. You would have adjusted based on your risk management. And then look, the market gives you so many opportunities to get into this market. Another high. Okay, price comes up, comes back down, fills in this gap here. You know, you could have got in here, maybe with either your stop underneath here or maybe around this mark. Let me get rid of these drawings. So yeah, the price gives you so many opportunities to get in. You know, if you didn't get in here, you could have got in here. Lower high. Price making more higher highs. So observing the Apple chart based on market structure is probably going to do something like this and then continue up, because we are in a uptrend, guys. And the moment it deviates, so let's say price does this, and chocks breaking this low, this would be your warning sign. And then if it starts making lower lows from this point onwards, breaking the next low, yeah, well, there's probably the likelihood of a new trend is forming is extremely high. So just to recap, when the first low gets broken, that's a chock. When the next low gets broken, that's a BOS, and vice versa for the upside. Let's open up gold here. This is the daily chart, by the way, guys. So, gold back in 2022, people were probably guessing gold's going to go up in the long term, but the chart gave you signals. So price here making lower lows. That's your high. Now look, guys, look what happened. The high, a chock happens here. People call it chock, some people call it other things. It's irrelevant what you call it. Ideally, it's really irrelevant as long as you know what it means when that first high gets broken. So upon seeing that chock, that first high being broken, then look what happens. Price comes up. Price is always followed with a retracement. Fills in an imbalance here, and then look, it starts making higher highs from that point onwards. See how powerful this is? And then the moment that high gets deviated, there's a chock right there. Price has a mini correction, making lower lows, and then it breaks that high with a new chock to the upside. And look, guys, once you see this, you can't unsee it. And then look, higher highs gets made continuously. Chock followed with a correction. You see, guys, so if you can master this, you can see the market in a completely different lens. Let me give you some more examples. Here's silver. Okay, so back in 2022, people were always saying our silver's going to go up, but rather than speculating, why don't you let price action lead the way? So price was downtrending. Silver was bearing in mind, silver was quite volatile. So, okay, so here on silver, back in 2000, it was making higher highs, higher highs, higher highs. Price is making continuous higher highs. And then the moment it chocks, price come back up, swing failed this high. And then that was the start of the correction. From that point onwards, it made lower lows. you see. But so as it's making lower lows and lower highs, lower high, lower low, lower low, lower high, look, when price took out that high, and I've built an indicator to help me with all this to see the market structure. Look how price starts making higher highs from this point onwards. We get a shock there, a little bit of downside, making lower lows and lower highs again. And then look guys, high gets taken out, the shock, upside. So yeah, it's extremely powerful.